How much stretch have you guys been buying?
I think we're up to like 110 million or so now.
It was inevitable, seeing all of the stretch buys and no common, that this was going to rip. And so when I'm putting on those covered calls, I just know at some point they're going to get wrecked.
And so I called the ATM trader. I was like, hey, look, we've got like, $100 million sitting on the bid at 100. Can you go hit it? And he's like, well, there's like, $4 billion sitting there and the company doesn't want to take it all.
Look, if you're trading under NAV, it's just the math. And I think it's the right thing to do for shareholders. It was difficult for us to get our heads around, going backwards in scale, but you live to fight another day. You do the right things for your shareholders, right? If you're trading under NAV, it's accretive to sell some Bitcoin, lever up a little bit, and buy back your shares.
In my view, we are really headed towards the multi-$100,000 and even potentially $1 million Bitcoin.
Parker, when are we hitting a new high?
August 12th.
Let's go. Hey guys, Tyler here. In just a few days to the Bitcoin conference, I'm gearing up to see if we get any big announcements from Treasury companies. 3 things on today's roundtable. We've got Parker White from Apyx, and he's admitting that strategy left 50 to 100% on the table with their last stretch raise. We've got Ryan Lane from Empery Digital explaining why selling Bitcoin under NAV actually grows Bitcoin per share, and we get price targets for the next all-time high, and one of them might surprise you about how quickly it's going to come. Alexandre's back in the seat with me today. Now let's get into it right after this read from BitGo. Before we get in today's episode, I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC-regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-Treasury to connect with their team. What's up, everybody? It's Tyler Rowe here today with the Bitcoin Treasuries.net roundtable. Welcome back. We took a week off. Alexandre was at the blockchain week in Paris. He's back at it in the seat, ready to roll. We've got Ryan Lane from Empery Digital, the Bitcoin Treasury company. We've got Parker White from Apyx, and of course, Soleil, the MSTR options ninja from True North, joining today. Welcome to the chat, boys. We're gonna dig right into it and have some kind of fun with some rapid fire stuff. I want to lead off. Obviously, we didn't stream last week, but the big story was the mega buy from Michael Saylor this week. Of course, 2 days last week, Saylor raised almost $2.5 billion with Stretch. All of you guys have been paying attention closely to the strategy story and have some related businesses. So we've all got a take on this. Let's keep it a little punchy. I kind of want to start with you, Parker. So with Apyx, obviously, you can give a little high-level overview to the audience for anyone who's been living under a rock. But how much stretch have you guys been buying?
Yeah, we've got a little over 100 million now. I think it's I think we're up to like 110 million or so now. And I don't know, I think we're probably at this point one of the largest holders, but it's effectively a stable coin or stable-like coin, as stable as Stretch can be, on-chain, so it's on the Ethereum blockchain, and it's got some kind of on-chain mechanics to it that allow it to pay about a 13% yield, so a little bit higher yield than Stretch itself, and it's available to folks, all around the world for the most part. I mean, there's some geos that are restricted. And then we just got a Kraken listing on Monday, which is pretty exciting. And so we're kind of expanding out the integrations and the partnerships.
Really cool stuff to follow. You've got you guys buying a lot of Stretch, people arbitraging the ex-dividend there. And we've got Saylor, who's floated the idea that they're going to go semi-monthly with the dividends. How does that affect, how your users and your strategy of the dividends paying out twice a month now, semi-monthly, Parker?
Yeah, it certainly helps things because, We aren't just a stretch pass through. We do have some SATA on the balance sheet. We will, if some other treasuries add preferreds, we'll probably allocate to some of those as well. And so it is a managed product. It's a managed wrapper. But one of the things that we do is we kind of stream out the dividend across the whole month. So every day you're getting a little bit, but that means that we have to make some trade-offs. And so one of those trade-offs is we have a 20-day unlock period to prevent arbitrage, right? So someone buying, holding throughout the month, selling right before X dividend, going into stretch, and then coming back. That would be the problem. And so this 20-day unlock period is, it's not great. People don't love it. It's kind of what we have to do, though, to have that, daily dividend stream. But cutting to bi-monthly would allow us to cut to maybe it's a 10-day unlock period or a 7-day unlock period, which would make the product certainly a lot more attractive. So I think this would be fantastic. I saw Matt Cole say something about them doing the same. I envision a pretty exciting world where you've got a whole bunch of DATs that have these preferreds and they all stagger it such that if you owned a balanced portfolio of them, you're getting dividends every single business day, every single trading day, which I think would be sweet.
Yeah, I think that's an inevitability at some point. The question is when is that going to happen? With stretch trading so much volume and raising so much capital in the market. Soleil, I'll come to you. You're tracking MSTR options. You're selling covered calls on strategy. How is basically, I would say, the recent price action and the recent capital raises on stretch affected the options market for strategy, as we're kind of, I'd say, probably moving into a more bullish regime?
Yeah, it was inevitable, seeing all of the stretch buys and no common, that this was going to rip. And so when I'm putting on those covered calls, I just know at some point they're going to get wrecked and I'm going to be in a position to have to either let shares get called away or try to do, some backflips and try to, roll out and up for a credit or whatever. But, with those stretch massive buys, I wanted to ask Parker, when he announces a big buy like that, do you puff your chest up? You're like, yeah, I helped. That was all me.
I don't want to give away too much here, but it's actually pretty wild. We were, leading up to the last 3 days, we hammer bought. So you can kind of see, you go to our website, apyx.fi, go to the dashboard, and you'll see a big cash build. And then, leading into it, the cash just gets completely consumed in the line chart. And so our broker does not allow us to trade away. So we can't trade directly on the ATM. It's a more kind of crypto crossover broker, Alpaca. And so I called the ATM trader. I was like, hey, look, we've got $100 million sitting on the bid at 100. Can you go hit it? And he's like, well, there's $4 billion sitting there and the company doesn't want to take it all. So, you need to cross and come up a penny. And that was a whoa moment for me, because I was like, oh, they could actually have raised a lot more. And I don't know if they're not raising all that much to avoid the, ex-dividend dip, because it's a little bit of volatility, or what's going on. But I think they could have raised 50, maybe 100% more than they did. And they showed restraint, which is crazy to me.
Yeah, that's crazy.
Making you cross the spread, though. That's great. That's smart by them.
Say that again?
It's smart they're making you cross the spread, right? They're not hitting you on the bid.
Yeah.
Yeah, it happened to me on a much smaller scale. My 4 shares I was trying to buy at 100 didn't fill. All right, that's fine.
That's quite the discipline there. Alexandre, I'll come to you. This has to be such a bullish signal for you, operating a Bitcoin Treasury company, to see people building on strategy, building on the preferred equities that Strive have. What picture does this paint for you in the coming years, as where Bitcoin's price is going higher, the sentiment on Bitcoin Treasuries is already turning, I would say, and just the potential is unlimited. How does this make you feel, and what opportunities do you see?
Well, stretch is really the answer for institutions. And you can see, and I can confirm, that French systemic institutions now know about stretch after the week I spent in Paris. And I've met quite a few of them. And they were all, of course, very impressed by such instrument. And what's happening is that we had a lot of time needed to explain what is a Bitcoin Treasury company and how can it deliver value over time and how can it increase Bitcoin per share and so on. And the short answer is that the product is the credit, and that credit and the ability for the company to issue credit at scale is the one thing that really maximizes value over time for shareholders. And bankers and institutions understand what is asset-backed lending, and they understand that this is asset-backed lending at scale in a way that has no liquidation risk and in a way that is at the longest duration. And it's effectively as a form of listed Lombard loan without liquidation risk. And institutions understand all of it because they do Lombard loans every day, and they do lend money to a lot of their investors based on all of their stock portfolios and so on, and with much higher levels of loan to value. And in that case, you have levels of leverage that are very low, around 20, 30%. And when you compare that with other types of lending in the market, it can be much higher. So, of course, it's Bitcoin. Of course, it needs to be conservative, and that's probably part of the reason why strategy is moving step by step there, even if the steps are very big. And the other part of it is not only that confirms and scales the opportunity for Capital B and other Bitcoin Treasury companies that have not launched yet those types of product, because you can see that perspective, and that attracts now again more interest also on the equity side, because investors can anticipate that potential issuance from those companies. But on top of that, it really opens new discussions with new institutions. And, I published recently also a paper on the most read newspaper for the banks. It's called Banking Review in France. And I talked about digital credit and tokenization. I also mentioned Apyx, by the way. And all the time, it's always the same reaction. What? Less than 2% volatility and 10+% performance. They don't understand, and then they understand like, oh, it's just effectively asset-backed lending that's 3 to 5x over collateralized. And most of them, they are past the event horizon, that they understand that Bitcoin is not disappearing. And when they understand that if Bitcoin doesn't disappear, the over-collateralization does the work. And then they just want to give access to STRC to their clientele. And then their next question is, how do I make that an institutional grade product? And for that, they need a basket of stretch-like instruments. And if they are in Europe, they want a basket that would include local type instruments like that as well. So that provides a lot of new opportunities, and a lot of institutions, that would have waited and so on. They now are very interested. They see the volumes, and it's not every day that you have that 5, 6, 7, 8 billion raise of a product in a matter of 1 year, and that you have 300 to $1 billion dollars of volume, 300 million to $1 billion dollars of volume every day. And that's really noticed, and institutions are just going to follow very hard there.
Yeah, the numbers are absolutely face melting, and it's the seasoning's happening before our eyes. But I think I was talking with Joe Consorti yesterday, actually, who says Wall Street's just dipping its toe. It's like it's the next halving, the halving after that, when they're really going to arrive. Institutions will arrive, so these numbers are going to look paltry maybe in a few years. Ryan, I'd love to come to you and talk about what you're doing at Empery. You guys are, of course, focused on building that Bitcoin per share, but you've been willing to do something that I think some treasuries haven't done. We've seen miners under stress who have sold off Bitcoin, or to fund operations or to pivot into an AI play. But you've been willing to sell Bitcoin, when you're trading at a discount to NAV. Can you walk us through the logic there in both the share buybacks and selling Bitcoin to close the net asset value gap?
Sure. I think it's important to know a little bit about my background, and it's relevant for all these conversations because I've run a hedge fund for almost 20 years. Right before I got into the Treasury, right before we took over a public company, that's all I did. I still do that. I still run a hedge fund. I'm still the principal of the hedge fund, and it's my daily work. So I've been a capital markets person for those 20 years. Right, I do transactions in the capital markets where we invest in public companies, right? So we have all that structuring capital markets experience. And look, if you're trading under NAV, it's just the math, and I think it's the right thing to do for shareholders. We came out into the buzzsaw of the trade busting, which was really unfortunate, right? We raised $500 million in July of last summer, and within just a few days, Treasuries started trading under NAV. Some of the ones that were, the ones with less liquidity, the ones that were, less followed, and so we came right out into that, and so we set up to be able to buy back shares to add Bitcoin per share, right? Because that's, you definitely want scale. There's no doubt about that, and it was difficult for us to get our heads around, going backwards in scale. But you live to fight another day. You do the right things for your shareholders, right? If you're trading under NAV, call it less than 0.95, it's accretive to sell some Bitcoin, lever up a little bit, and buy back your shares. Our shareholders like that. We have a big institutional shareholder base, and you can exceed the returns of Bitcoin just like you can when you're selling stock over NAV. So I think it's very similar. Goes to my hedge fund experience. We think about this very mathematically, and we just want to increase Bitcoin per share for our shareholders and let them beat Bitcoin. When Bitcoin goes on these runs, now our stock really moves because we've added a significant amount of Bitcoin per share, almost like 30% since launch.
Given your hedge fund background, have you found that conversation with investors, especially, as you said, there's a large institutional base of shareholders. Have you found that conversation to be quite easy to explain, show them the math, and it's like, okay, this makes sense, and there's buy-in there?
Yeah, there's total buy-in there. These are all my peers. I've been working with these guys for 20 years. They know and respect me, and they know that if they were sitting in my seat, they would want and do the same thing. So we're just doing, what the math supports. And I think, it is unfortunate that we still are trading under NAV, and we're still active there. And we've closed that gap significantly. But I think you need moves like we're seeing now in Bitcoin to get people excited again and to make the trade work and to make it so the smaller Bitcoin Treasuries can, get back on the other side of NAV and start accumulating again. And we think a lot about prefs and things like that, but I think you need a little more scale than we have to execute the pref properly. And that's on our radar. We have done some raises, but they're not prefs. And we did some equity over NAV. We sold 103% of NAV with a warrant package, and those work. You can get right back in there and buy back your stock, where you can sell it at above NAV and you can buy it back under NAV, and you're still adding Bitcoin per share. So there's some math to play with.
Yeah, let me jump in there real quick because Ryan, I'm a toxic Bitcoin maxi, but I don't hate that at all, because if I imagine a hyper Bitcoinized world in the future where dollars are irrelevant, what's the value of every company going to be priced in if you have to pay for it in Bitcoin? It's going to be Bitcoin per share. So I think the math just works, and I'm not one of those guys that you can never sell your Bitcoin to buy something that you value. I mean, I actually sold some Bitcoin to buy some strategy shares when I thought it was undervalued. And, you're just doing the same thing because you believe in your company. So
That's right.
I don't hate that at all.
If you're trying to get to the top of BitcoinTreasuries.net, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide. Why? It offers regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the New York Stock Exchange and hold a federally chartered national bank license from the OCC. For Treasury companies, it's a must call. This is the infrastructure layer that really matters. Learn more at bitgo.com. It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
Yeah, that's right. No, I think a lot of the Bitcoin maxis push back on this concept early on, but then when you really think through it, it's a solution to add Bitcoin per share, and that's what the shareholders are there for, right? They're there for me to execute the strategy, and if you're trading it, 101 of NAV, it doesn't make that much sense to sell stock, right? You should be more in the pref department, or you should be putting a little bit of a warm package on so you can sell at 103 or 105 or 108 to make it accretive. So I think it's all about just adding Bitcoin per share and executing the strategy as efficiently as you possibly can, right? Saving on banking fees, just saving on lawyer fees, right? Because it's not cheap to run a public company, especially in the US. So you just have to manage all your pennies and make sure that all your dollars go to buying Bitcoin. So I appreciate that. I appreciate that you said that. I think people are appreciating the trade.
So I'm one of those Bitcoin maxis, fortunately or unfortunately. And I will not push back. Of course, Ryan, I understand that there are circumstances and there are also different flavors of strategies and so on. And also, it is also because a public company has that capacity that it makes it, of course, special, and investors can appreciate different strategies. As you said, Ryan, you might have investors that appreciate that strategy, and institutional investors particularly. Of course, on our side, and that's also the strategy playbook is, as you mentioned, Ryan, the scale, the size, and what I think is important to avoid is that you could end up with all the shares and no Bitcoin, and so that's of course not the strategy. So on our side, of course, we've been fortunate to maintain a premium, and so different situations as well. But I think that it is the Bitcoin per share is, of course, the objective. But in my view, the first principle is to accumulate Bitcoin in a way that maximizes Bitcoin per share. Because the accumulation of Bitcoin is also the thing that allows for more capital raising, which can further increase Bitcoin per share. And so on our side, we've privileged the issuance of new types of instruments, aside from the preferreds, the call options that we have already discussed in the past, Tyler, but that enable us to accrue Bitcoin per share with an issuance that doesn't imply the issuance of shares. So with the premium that's paid up front, for example. But I'm not pushing back. I think different strategies and different situations, different markets, different investors as well, sometimes make that difference. But I think it is important to keep in mind those Bitcoin maximalist principles that, yes, you might have special situations, but at the same time, the overall strategy is, in my view, first, the accumulation of Bitcoin in a way that increases Bitcoin per share. But pursuing Bitcoin per share only without the accumulation of Bitcoin over time can be dangerous. But I assume, Ryan, that you are also doing that in the perspective of other operations that could also enable you to accumulate more Bitcoin. So that's where it all comes back together.
Yeah, I totally agree with all of that, and that was why it was difficult for us to flip and start selling Bitcoin after we had accumulated so much. But you do what you need to do in the short term with the ultimate goal of acquiring more Bitcoin, right?
Exactly.
And that's when you get the scale. I do, from a treasury perspective, I struggle a bit if you're, call it sub 10,000 Bitcoin, if you're issuing prefs, right? Because the reality is you're spending cash, right? You're servicing those dividends, and every dollar you spend to service those dividends, right, you're paying 8, 10, 12% on that, right? From a hedge fund perspective, I own a bunch of them on our books at the hedge fund. From a treasury perspective, I don't love servicing those dividends with cash, because where does that cash come from, right? If you're a Bitcoin treasury, you're either selling common or you're selling more pref, and it's at some point it just becomes very burdensome. And even though it's a perpetual preferred and never comes due, right? You're paying 12% per year. That adds up pretty quickly, and within 7 years, you've now paid for the full principal, right? You've paid back the full amount of that principal of that pref. So I do think it is a great solution. It is a great institutional instrument, but I do think there are limits to it. But there are other creative ways to do it, right? That is why we've chosen equity so far, so we don't have to service those dividends. But I think it's all balance. It's all about scale, and if you have the luxury of being 5,000, 10,000 BTC, or whatever your crypto of preference is for your DAT, I think that you just got to pull from all these different instruments and design your capital structure responsibly. And look, Strategy's done a great job, right? From a leverage perspective, they have a very low leverage ratio, right? So there's no real concern there, even though the media loves to talk about, will they have to sell Bitcoin? They have so many other instruments they could tap into to be able to service this stuff, even if Bitcoin goes to 20,000, which I don't think that happens. I also didn't think we would, be in the 60s, but there are lots of geopolitical and political things that drive this thing that will ultimately drive it up. But in the short term, you gotta shake it out of the weak hands.
I guess I've got a little different view on smaller entities issuing prefs and like the interest coverage and all of that. I mean, I think as long as you think that Bitcoin's going to go up 30% a year, above your cost of capital, then it makes sense to, it makes sense to do it. Now, trading wise, volume and liquidity wise, you may not kind of reach the attention level as Stretch, but I think what you're going to see as this industry develops, as SATA gets back to par and then stays at par, and they do a couple months of the cycle of pegged out pre-X dividend where they're able to issue a bunch. I think people will start to see, oh, look, the model works. It's not just Stretch. Stretch isn't just a unicorn. It works for someone else. Someone else much smaller will try it. I think it will inevitably work, or Apyx will make it work. And then it's developing this digital credit industry, right? And just like banks of all sizes issue credit, JP Morgan all the way down to tiny First Bank of Canadian Texas or whatever. All these banks issue, they have capital structures, they issue credit. And so I think there's, for the right interest rate, I think there's a place for all of them. And I think, again, as long as we believe in Bitcoin long term, which, I mean, I don't know, I guess we'd all wouldn't be here if we didn't, then I think it makes sense to issue it and, hold the buffer, the 2-year, 1.5 year, whatever cash buffer to avoid having to sell Bitcoin when it's down. But I think as long as Bitcoin's going up and you just don't commit to never, ever, ever selling any Bitcoin, which Ryan, you guys, have sold some, which I think is great, then you could always break off a little piece and, use that to fund dividends if you need it. But I think as long as Bitcoin's continuously going up, you can kind of always raise more capital.
Yeah. I would just want to add that over time, the size we calculate, of course, in number of Bitcoin, but for the traditional market, they calculate it more with the value of those Bitcoins. So I think that over time as well, those institutions, I think the type of size that you mentioned, Ryan, is likely more for the initial issuance. Because a lot of institutions are interested when the market cap is at least 1 billion and you can raise 200 million or more. Actually, that's small still. So I think there will be potentially more opportunity for collaboration in terms of issuance at lower levels. But you, of course, need to have a slightly more innovation or to have strong strategic partners at the issuance level that would enable you to launch such a product without that typical systemic investment bank that would need that bigger size. So, and at the same time, there are other alternatives. For example, of course, it's not the same, but we've seen the credit line that Metaplanet has taken at some point in the last few months, and a few other companies do that. Of course, the main difference is the liquidation. That's the additional risk, but lower amount of BTC can also work if you look at the different alternatives. It's just that at the beginning it might not be with the same exact partners and structures, but over time it will go there. And at Capital B, we look at those alternative ways to get it through as well. So I think tokenization will play a big part there too, because in my view, a lot of the liquidity, the participation will likely go from that part of the business for as well for the smaller companies potentially.
Yeah, I'm curious how all of you guys who are running treasuries kind of manage or expect to manage. Bitcoin's obviously going to rip at some point. We're bullish on the long-term prospects, but how do you manage that multiple to your net asset value? Ryan, it sounded like you might be more willing to sell into, just a smaller premium. But I'd like to go around the horn and then get your take, Soleil, as an investor about, how thinking about how treasuries do manage their multiple when they're trading above their net asset value. Like, does it make sense to let that run? And how can you most effectively manage capital raises in that environment? I'll start with you, Ryan.
Yeah. So look, here's the way we think about it. I think it's really important to, in the context of that question, to understand what your capital structure is and what your corporate structure is, right? And what your cost of raising capital is. Like, we know all the investors. We don't need to use banks. We can go direct to investors. We've done that. And then what does your corporate overhead look like? How much many dollars are you burning? Are you not burning any dollars, right? Because it's about how those dollars go from the raise into buying Bitcoin, and how efficient is that, right? So you want to be break even on the corporate structure at least, and then you want to have minimal fees associated with that raise. And I think to the extent those things are true, then you can raise it at a lower premium to NAV. If you've got a infrastructure that's a little bloated and you're resizing it, or you're scaled for more Bitcoin, or whatever your case may be, and then you're paying transaction fees and legal documentation fees, like those things add up, and every dollar doesn't go to buying Bitcoin. So I think it really depends on your unique setup, right? And different regions around the world have different expenses with your exchange listings and your regulatory filings and all your compliance stuff. So all of that, unfortunately, drives some of the decision when you're running these treasuries, because public vehicles are just not cheap.
Well, on our side, of course, fully agree. You have to be very conservative. There is costs in terms of the lawyers, and in terms of when you do capital raises in and of itself. You have also investment bank costs as well. Even if as well we have raised 80% of the capital directly with the investors. And of course, when you pay the fee with investment banks, you have raised capital as well. So I think it's more about that structuring and to be very lean. On our side, we are literally free operating people for the treasury. And of course, there is the board, and there is the CFO, and the CEO, and so on. But you can be very lean, and we have established back in September last year a cash reserve as well as a Bitcoin operational reserve, to have that buffer, and to have that operational buffer for about 2 years, as Parker mentioned, to make sure that you anticipate those costs and the costs of the Bitcoin Treasury company. And we publish specifically that Bitcoin Treasury company costs, and we have those reserves aside for those needs. So I think you can be quite conservative, and we have done it at every raise that we've done, to keep part of the raises aside for those conservative estimates of the cost. So I think that's the most conservative thing. And then, well, the company also have the Bitcoin on the balance sheet, and I would join the argument of Parker there in terms of the preferreds. A company could raise Bitcoin that it allocates to the long-term strategic reserve, and Bitcoin and or cash that it would allocate to that operational reserve for conservative purposes. And over time, well, the bet is that Bitcoin is going to outperform that cost of capital. And in my view, it's actually going to outperform it quite more than what we would expect, because of all of that institutionalization, and because of all of that structural buying pressure. Those numbers of Bitcoin added by strategy, we would have thought that this would have been 3 years away, that we would have seen those $1 billion purchases per day. Michael said, I don't know if it was 5 to 10 years, that he will be buying $1 billion of Bitcoin per day. It's today. So I think what is coming is really quite impressive, because if it's 1 billion today, it might be 10 billion a day in the next 5 years. And that flows back to Bitcoin, and strategy has Bitcoin on the balance sheet, and STRC issuance capacity goes up as Bitcoin price goes up. And that's quite a reflexive movement. And of course, on the other Bitcoin treasury companies that can position as the early stage strategy in their market, region, country, or specialization, I think the opportunity is really great, because institutions want that basket of instruments. they want that sector, they want that benchmark, and I think every company can differentiate with its market capitalization structure, the type of investors, and the type of products it can issue. So I think a lot of room for innovation. And Parker, I hope that the future you envision is coming quite fast, actually. So
Yeah, I'm
we'll see.
excited. I think 2 points. So one point that was made earlier, I forgot to make earlier on the prefs. I think the super interesting thing about them that a lot of people discount is that, everyone's seen retail's growing share of overall equity volumes. I think retail is becoming a larger part of just the investing corpus of capital out there. But retail can't buy converts. They can't buy most bonds. They're 144A or they're too large in size. But a lot of people they don't want to use wrappers. They don't want to use a mutual fund or an ETF. They like buying what they know, to use the Peter Lynch term. And so what these prefs do is they actually basically make a credit instrument available to retail. I can go into my Schwab account and I can buy 10 shares of Stretch or 5 shares of Stretch. I can't do that. I can't go buy the bond personally. I'm not a $100 million QIB, sorry. And so I think there's this other phenomenon, and I think even if non-Bitcoin companies were issuing prefs, I think there would be growing demand for it just because of the groundswell of demand from retail. So I think it's this interesting confluence of factors. Obviously, Bitcoin is a strong one, but I think it's also just the retail investing factor that creates this perfect storm.
Yeah, that's a good point about the direct-to-consumer, Parker, because just like Amazon is delivering stuff straight to your door, I mean, the average retail person can literally just go on their Robinhood account like they do everything else and click a button, buy some Stretch. So I love that point.
And it's, investing is becoming more and more global. So when I was in Seoul, Interactive Brokers is advertising everywhere, right? And so people are trading all over the place. I think the the number one most traded stock in Korea was Bitmine for quite a while. And for a while at DFDV, our largest volume share, 50% of our volume was coming out of Korea. And so investing is just all global. And so you might be tapping into investor bases in random corners of the globe that you don't realize when it's tradable on a brokerage account, which I think is super cool. Putting on my DFDV hat, on MNAVs, I think, for better or worse, a lot of these, the MNAVs mostly trade together, right? And so really expensive stuff, there's a lot of relative value trades that can be had. So expensive stuff can be shorted, cheap stuff can be longed to compress that. And then there's maybe some structural differences, if you have more leverage or less leverage, depending on the asset you're on. But I think generally speaking, you're not going to see, unless, the company's completely broken, you're not going to see one DAT trading at a giant discount and then another trading at a huge premium. Again, unless there's some kind of short-term dislocation. And so I think in some cases you kind of want to take what the market gives you. And if MNAVs are all accelerating, maybe don't just crush your own while the rest of the market's really running. You kind of let yours run with the market, put shares into the market. And then if the market's really pulling back, you don't try to defend a 2x MNAV when everything else is coming down. Because if, you're a small treasury at 2x and MicroStrategy's at 1, you're going to 1. That's gravity. And so I think kind of following the market, and you can, play a little bit around the edges is the best way to manage your MNAV.
Yeah. Do you see Soleil? Do you see strategy as a signal there and kind of a leader on market sentiment for all treasuries and take that where you want to?
Yeah, I don't necessarily know that that they should be the driver for all companies, and I don't even really mind if a company's trading under 1 MNAV and even ATMing the common under 1, as long as their leverage ratio justifies that amount. Like if I wanted to leverage my own Bitcoin, I could pay 10% over spot price as long as I had 20% leverage and would still work out over a 4 or 5 year period. So I don't even buy into the below MNAV. You can't ATM the common because if you have enough leverage, it kind of justifies that. And yeah, I think as long as the company is executing a transparent plan, then I'm really fine with it. Every company says they have a plan, but a lot of times they just say they have one, but don't tell you what the plan is. So if you're transparent with the investors, I think it's fine. So every company selling Bitcoin isn't going to get dinged for that. Like, I guess Mara would be a good example of a company that I wouldn't touch because I don't think that they sold Bitcoin because they had a plan. They probably just mismanaged their cost of production. They have a history of like mining Caspa and, they accept money to put spam on the blockchain. So when they make a decision to sell Bitcoin, I don't give them the benefit of the doubt that they did it for a good reason. But these other companies that are explaining to the retail investors what their plan is and then executing it, I think that's perfectly fine.
I'd like to pivot and talk a little bit of macro and, Bitcoin's price has obviously been running. It looks like, man, we're almost at 80,000
Are
right
we?
here.
I've been distracted by the podcast.
Let's
Yeah,
go.
this is you
Let's
gotta get
go.
out there and raise some capital, Ryan. But
There we go.
this is kind of a historical trend moving into the Bitcoin conference. Of course, we got that coming up next week. A lot of times there is a price pump into the conference. Who knows how correlated that really is? And then sometimes there's a sell off when the conference kind of begins. It's kind of crazy to see these cycles repeat. And even we kind of topped in this recent regime back in October, which was kind of right in line with the 2017, 2021, and then 2025 price action on Bitcoin. Yeah, what do you guys think about the broader macro picture? Of course, we've got the crisis in the Middle East with Iran through the Strait of Hormuz and Israel and U.S. operations, to dismantle the strike capabilities of Iran. But Bitcoin's performed well, just like in a lot of crises. Weeks later, 60 days later, I think back to the regional banking crisis. I think to COVID, it bounced back pretty quickly and had kind of a sort of V-shaped type of recovery, but it outperformed all assets, and right now Bitcoin is outperforming the broader market indices. How do you guys think about that? What's it is Bitcoin telling us something about hostilities, or what's your take on that? I'll start with you, Alex.
Well, I'm based in Abu Dhabi, and I can confirm that the price of Bitcoin has been moving very linked to the advance of the negotiations in the region. Every time that there was good news, you could see the price in real time, sometimes even just before. And and the reverse was true. Sometimes you could see the Bitcoin price drop, and a few moments later, it was just at the beginning. You could see some alerts coming. So Bitcoin has been used by hedge funds and by institutional allocators to amplify those returns related to the geopolitical area and related to the macro environment. The reality is more historic. Historically, investors and professional investors tend to sell at the sound of the trumpets and buy back at the sound of the cannons. And that's exactly what we've seen when we've had the cannons sound when the US started to hit Iran, because the market had already anticipated a lot of this and a lot of the potential effects. Then when the war actually came, the market had very little to win by betting for Iran, and a lot to win by betting with the United States and their allies. And what could go out of this conflict is the inevitability of more liquidity coming into the market to go to the rescue of global market experiencing tensions due to the shortages in terms of the energy supply. So what we are witnessing is investors starting to position slowly but surely into what they anticipate as another great money printing experiment. So in my view, that's what is happening. And the movement that we are seeing right now, it's a bit like when you have a big wave coming in the ocean, sometimes you have those small waves at the beginning, and when you looked at the price back and you said, oh, that movement. And those are the little shock waves that precede, in my view, the bigger one. And when you see the Morgan Stanley ETF and its success, and when you see the Charles Schwab announcement that they will get access to retail for Bitcoin, and actually they were the first one to activate active trading for our CPTLF stock. So that's quite interesting in the US, the OTC one. And you see that this shows the priority for such a great and important institution in the US. One of the most important ones, 10 trillion plus of assets, and such an influence in the traditional investor mind. And you can just see that they just told you that they recommend a 2 to 7% allocation in their video that was dedicated to appreciating the risk of Bitcoin. So in the video, they show you like the typical investor that would invest 70% or 90% of its portfolio in equity. He could allocate conservatively 7%. And the conservative investor that would allocate only 40% to stocks or 60%, then could allocate 2%. And we've gone from you could maybe allocate 1 to 2% if you're the most aggressive investor, to now 2026. Yes, 2 to 7% is very conservative. And this is coming from Charles Schwab. And if you do the math and you apply those types of recommendation to all wealth advisors and all of the retirement money in the US, you realize that this is just starting, and the wave is going to be extremely big, and we are really going towards the market capitalization of gold, and that's $2 to $3 million Bitcoin over the next 10 years. And that's quite higher than the cost of capital for the preferreds. So everything is coming together, and Bitcoin is really getting into the hands of financial institutions there.
So I agree. I agree with a lot of that, Alex. One of the big observations that I made as this conflict started happening was, if you've read the BlackRock report, which basically says that there's a lag instability in Bitcoin when there's instability, politically, geopolitically, or whatever the case may be. In this case, Bitcoin was actually immediately very stable. Yes, there were fluctuations, but it found support levels during a massive geopolitical conflict that has and will have massive economic consequences. So I thought that was really reassuring. It showed the stability of the asset in the face of massive instability. And we're derivatives traders at the hedge fund. We do a ton of that. And we were watching the vol, and it just looks very encouraging. And we anticipated that if you start to see stability coming from the geopolitical front, that Bitcoin would really make a move. And I think that's what we're seeing right now. I think it got out of a lot of loose hands earlier on. It was in stable hands, acted really well from a vol support level perspective. And now it just feels like it's going to be off to the races, right? And then you overlay that in passing a market infrastructure bill, hopefully soon in the US. It's got to get done before midterms, or we probably have problems. But that will just integrate it into the system in a way that makes it extremely easy for people to be able to access, because you can hit all these different instruments in your accounts like we were talking about earlier. But to buy Bitcoin directly in your Fidelity account or Schwab account is difficult. Custody is still difficult for the average person. If you're a kid, you basically have very little access to it. Period, right? They won't, if you have a youth account at Fidelity, for example, they won't allow you to buy Bitcoin. So you got to go buy one of these other, instruments, which is fine. But I just think there is demand that will come from both institutional and retail investors once you get a market infrastructure bill, once the clarity bill goes through. So I think that will be a big catalyst for this year, and I just think it's demonstrated stability that will give people more courage to be able to make purchases when you see weakness.
Yeah, how big is market infrastructure bill, Parker, for you? Are you holding your breath? That's going to happen in the near term.
I don't know. I think it'll get done. I'm no policy expert though. So I don't know. I don't think it'd be great for it to get done. I think the market, I really look at Bitcoin as the canary in the coal mine for liquidity. And I think as, everyone basically here has said, Bitcoin's looking through and seeing that liquidity is growing for one way, one way or another. And so I think what you're going to see over the next 3 to 6 months is a bunch of positive news on the liquidity front. Kevin Warsh getting in, interest rates coming down, some more printing globally, maybe printing in the US. And then I think people will start getting excited about Bitcoin at that point because liquidity is coming into the system. But Bitcoin today is already predicting that and pricing that. I think clarity would be great, but I don't know. As Lynn Alden likes to say, nothing stops this train.
I'm curious your take, Soleil, on that. Obviously, philosophically, you'd like to see some more restraint from government in the way they're spending and the way they're, have a loose monetary policy. But we know that, like Parker said, nothing does stop this train. But I think we can all. I'm never going to celebrate government regulation, but getting some clarity and structure so there's no longer this regulation by enforcement that we've dealt with, for the past decade plus in the space is huge. What's your take on the political landscape and where we're headed?
Yeah, unfortunately, we're going to make a bunch of money off of the war. It's a controlled demolition in my view, and whether we're buying bombs or rebuilding after the bombs have been dropped, it's just going to be nothing but money printing to pay for whichever we're paying for. But I mean, there's a lot of global macro that could get resolved by the end of the year that's bullish. Maybe Trump meets with China, resolves the tariff stuff. But I really think as far as outside of the global macro, I think that spam gets resolved end of this year, September, October. The user activated soft fork is going to remedy that. And I think that's the barrier for Bitcoin to actually get into price discovery. So I'm waiting for end of 2026, beginning of 2027 for that. But as far as the global reset, I actually have a question for Alexander, because I have this theory that when Tesla puts all of the gas car companies out of business, Metaplanet might almost single-handedly save the Japanese economy. And I wonder if you think that Capital B can do something similar for your country and maybe even some of the other Bitcoin Treasury companies in Europe after this global reset, and we're kind of like trying to build from the ashes. Do you see yourselves as like stable leaders that are going to take us into the next 20 years?
Well, that's our mission. We want to provide that on-ramp to Bitcoin for populations in their brokerage accounts. And at least our shareholders realize that we have a very strong community of French shareholders, international one as well. But there is a Discord of French shareholders that's really aligned with this Bitcoin maximalist long-term vision. And they realize that, but I think that it will actually take longer than we think. I think that governments have great capacity to print more money and to find new instruments and so on. And at the same time, the moment where the trust in the local currency disappears can happen anytime. So I think that nobody really realizes that. I met with the CEO of one of the largest banks, and we discussed about recapitalizing Europe. And the largest financial institutions don't really see that yet in Bitcoin, but we do. Sometimes I run into the experiment with those institutions and shareholders, and even with about 3,000 Bitcoin, our objective is to go towards 42,000 Bitcoin by the end of 2029. But even with the 3,000 Bitcoin we have, with the trajectory of Bitcoin that we can see today with the information we have of going towards that 30 trillion market cap and so on, that's already potentially in billions of market cap for capital B. And if in the meantime we have increased Bitcoin per share by a certain number, and that we have increased the number of Bitcoin by on the balance sheet by another number, that can be tens of billions on the balance sheet of euros. And if the euros disappear in terms of the trust of the population at some point, you cannot do the calculation anymore, because only if you have Bitcoin on the balance sheet are you worth something in your country and the region. And so I think that's where the size elements start to matter again. And that's why we have, with the potential of going towards our objective, even of the 42,000 Bitcoin, that could already be part of the largest capitalized companies over in France. And if we go towards our objectives, that would be the largest company capitalized over in Europe. So, and that's taking assumptions of 20-30% growth of Bitcoin and strategy-like growth of the Bitcoin metrics. So if we are able to go into that direction, that is the potential destiny of the company. And we take that seriously. If I do what I do is because I work for Bitcoin. And I came to the conclusion that the best contribution I can make to Bitcoin is by bringing forward the most maximalist, consistent, systematic Bitcoin Treasury company in Europe. And that's the mission. And I think that we can make it. And I think France is also like the Japan of Europe. We have the most individual participation in the stock market, the most sophisticated one as well, because of a lot of finance people have done math in France, and they do the math, and they can come to the conclusion of Bitcoin per share. That's quite important, and we have, and it's the largest credit market in Europe as well. So I think France is quite well positioned, and over time, France is also the number one producer of nuclear power. And I think that at some point they will realize the Bitcoin mining thing, on top of the fact that we have also a sovereign wealth fund, and we are part of an index of that sovereign wealth fund over in France already. And we are part through the life insurance programs of 8 to 9 life insurance programs already over there. And part of the shoulder, it's already 20,000. I hope we can get to the 200,000 of Metaplanet over the next cycle. But if you look at the shoulder discussions, 80% of them have discovered Bitcoin with the company as well, maybe half. And many of them have developed their Bitcoin conviction together with the company. So yeah, we feel that duty, and that's our mission.
Cool. Exciting times, guys. We got great stuff ahead. I want to go around the horn real quick, 1 or 2 words each. Let's have some fun. I'm not going to hold you to it. When does Bitcoin hit its new all-time high again? Let's go with you, Alex. Give me a word or two.
I think, it's as usual over the next cycle towards the next halving. Yes, I know the halving has less importance, but still there are investment cycles, liquidity cycles. And in my view, we are really headed towards the multi-hundred $1,000 and even potentially $1 million Bitcoin.
Okay.
Yeah.
Parker, when are we hitting a new high?
August 12th.
Let's go, Ryan.
What's going to happen, in my view, is you're going to get the Clarity Act through, and then you're going to have U.S. Treasury strategically buy. I think that's going to happen, and then you'll have treasuries around the world buy, right? And that's going to get parked, right? That's when
Awesome.
that's when it'll move, like for real.
Soleil, when should I be buying my leaps?
I hate to be the not the most bullish person on the panel, but I'm going October, so I'm a little bit behind Parker.
All right.
Sooner than you expect is the answer.
Thank you guys so much for your time. Of course, we got Ryan Lane here from Empery Digital. Check them out. They're trading on the NASDAQ. Check them out on Twitter. Super great communication about what they're doing. I love Ryan's videos. We got Parker White from Apyx and the DeFi Development Corp, also trading on NASDAQ. Of course, we've got Soleil from True North. And of course, Knight Who Says Knee, the options ninja on YouTube and X. Love following along with your work. And of course, my every week co-panelist, Alexandre Laizet. Great to have you back. Great to see your smiling face. And thanks for always keeping us bullish. Have a great day, guys. And thanks everybody for watching.
Cheers.
Yeah.
Thank you, Tyler.
Thanks.
Hey guys, quick one from me here, Tyler. Thanks for sticking around to the end. That means a lot. I'm building this channel out into a home for serious Bitcoin Treasury coverage, and I want you in the conversation. If you've got questions for the roundtable crew, a company you think deserves a spotlight, or just something you want us to dig into next Thursday, email me at hello@bitcointreasuries.net. And if you haven't subscribed yet, do that now so you don't miss Tuesday's interview with Joe Burnett. We've got a great one coming up, and you don't want to miss it. Stay orange, you guys.